Ranjan, it's great to have you back. You've looked over the quarter, and it sounds like you're a little conflicted about how much news was good versus bad.
Yeah, DoorDash, it's in a tough place right now because they fit into this larger story about companies that kind of tell these grand visions. Can they actually, realize them? Because for months and years, investors have given so much leeway to companies that make these grand claims. But DoorDash's earnings, they weren't bad. Net revenue was up 34%. They're still growing. And most importantly, and they said this like 4 times in the earnings call, 14% of monthly active users were participating in adjacent non-food categories like grocery, pet food, and alcohol. So it kind of starts telling this story that it's not just about food delivery, which honestly no one has cracked the code how to make money. It's about these higher margin, non-perishable businesses. But as you just said, this is a company that still hasn't shown it can make money. The only quarter of profitability they had was at the height of the pandemic. Their losses increased in 2021 up to $468 million. Food delivery as a business, no one really knows, will it ever make money? So DoorDash is in this position where they have to show that they can realize this grander vision if they're ever going to become a profitable, sustainable business. And finally, I think investors are starting to pay attention to this kind of thing.
Yeah, I wonder, I mean, take Amazon over the years going back to the late 90s or even early 2000s. There were quarters that were great, quarters that missed, investment cycles, which they were very clear about, all because they were chasing a very long goal. Could this be sort of the same dynamic?
It's tough because for the last 5 to 10 years, every single startup, every company says, we're the next Amazon, we're the next Facebook. Remember, Amazon, they were building this, but the expectations weren't baked in. They were allowed to not show profit because they kept investing, but they showed success over and over and over again. And remember, Amazon was making so much money with AWS, they're basically hiding it from investors. All of these companies that were valued, remember, DoorDash was valued at 22x sales about a year ago. That's like a pure software company. Now they're at a more reasonable 6x based on, I think, where the stock is trading right now. It's a reminder that companies like DoorDash, they have to show concrete, tangible results into realizing these visions. They have to show, and investors are no longer going to give a pass into making promises about stories. DoorDash has been consistent forever, the operating system for local commerce. Finally, investors are saying, show us that this is possible.
Ranjan, I don't disagree with you. I think that DoorDash has a tough proposition, and it's going into this extremely competitive field of grocery and convenience where it's battling VC dollars at private companies like GoPuff and FastAF. But why are we talking about DoorDash here? Have you written off Uber? I mean, at least I guess you could say if you like DoorDash, it's making money much better than Uber Eats is. It's captured so much market share versus Uber and some of the other companies in this space as well. So if you were going to bet on one horse, why wouldn't that be Tony Xu and DoorDash that has actually shown much better numbers?
No, I would say DoorDash is the best in a bad category. You know, DoorDash, Uber kind of exemplifies this whole telling a grand story. Remember, they weren't just black cars. They were going to transform the logistics infrastructure and disrupt FedEx, and they're trading 13% below their IPO from 3 years ago. I do think DoorDash, in a category that is not necessarily the most attractive, has shown they are better at execution than anyone else. They've started to show that they can make these strides. But again, the fundamental question is, can they actually realize that vision? And I honestly, food delivery, we're many years into this experiment and no one has shown that it is a profitable, sustainable category.